Hey guys, if you've been paying any attention over the last couple of weeks, you know that interest rates are going up. It's got a lot of people freaked out. A lot of people are kind of wondering how long this is going to last, what kind of an impact it's going to have to everything going on out there in the real estate market. And I thought today we would team up with one of our business partners, Stephen Knorr with Alcova Mortgage here in Harrisburg, and ask him a few questions about what he thinks is going to happen going forward. Talk about some strategies that we've been working on together to get more people into houses in this competitive market, and a whole lot more. So let's go tap on this door and see if we can find out where Stephen is. Hey guys, welcome back to the channel. If this is your first time here and you want to know everything there is to know about living, working, and playing in Charlotte, North Carolina, go ahead and tap on that subscribe button below and then tap on the bell for notifications. So you're up to speed on everything that's going on in the Charlotte real estate market. In today's video, I want to sit down with Stephen Knorr with the Knorr Group of Alcova Mortgage. We're going to talk about some interesting things that are happening right now in the mortgage world and the real estate world. So without any further ado, let's go ahead and meet Stephen and kick this thing off. So Stephen, thanks for taking some time to speak with us today. Guys, this is Stephen Knorr with the Knorr Group of Alcova Mortgage, and Stephen has been a great business partner for Dreamline Realty for the last couple of years. They do a fantastic job. Service is unbelievable, and I can't think of a closing that we've ever missed from all the business that we've done with the Knorr Group. So I wanted to get Stephen on here today, talk about a few things that are going on in the mortgage business, in the mortgage world right now. And as a lot of people have been kind of freaked out a little bit over the last couple of weeks, is hearing about these rates going up. So I wanted to kind of get Stephen's thoughts of kind of how we navigate these waters with these rising rates, and have him kind of let us know what he's seeing out there and maybe what the future holds going through 2022 and into 2023. So Stephen, can you talk about that a little bit?
I sure can. And first, thank you for having me, Brian. Awesome local real estate agent here, Dreamline Realty in Harrisburg. They've done a phenomenal job also navigating these waters. So this is my 16th year of lending. So I've been on this roller coaster before. Rates go up and down, the market goes up and down. So we are hitting a peak on interest rates, right? So what we want to do is not necessarily focus on the interest rate. They are up, they're well into the fives. They're the highest they've been since 2011. We can't control that. But people still need housing. Rent is still through the roof as well. So the idea of buying a house and owning a home is still the #1 priority. With that comes a payment. So we want to focus our attention not so much on the interest rate. The interest rate derives the payment, but the payment is what the client affords. We approve people off gross income anyways, which is the money you never get to spend. So we always talk about affordability. Whether your rate is 5.25 or 5.5, or even if they go higher than that, the payment is still what is the important piece of this puzzle, okay? People way smarter than me are saying that rates will come back down. These economists are thinking that the inflation is going to peak around October of this year, which will then set into motion some other things in the economy that will allow the rates to trickle down over time. So whether you get a 4.875, a 5, a 5.5, or even above, that rate's temporary. We're probably going to refinance those clients. We're telling them that as long as you can afford your payment now, that rate isn't forever. The normal mortgage is 5 to 7 years, right? This is probably going to be more of like a 2 to 3 year window. So, it's still a good idea to find the payment that you can afford and then match that up with the house. Because if you're renting, rent is going up like 10% every time you turn around, and there's no end in sight for that either. We hate for people to waste money. Invest in your house, invest in your family, and make your budget something that you can afford, and allow us to help you find that payment goal. That's really what we're emphasizing right now.
Yeah, and that brings me up to another point. Totally talking about interest rates, and people are wanting to try to get these rates lower in this environment right now because they're have been used to 3%, 2.5% for so long. Now anything that kind of goes into the fives, it's like a shock to the system. We closed a deal a couple weeks ago, and one of our borrowers actually, I didn't know this until we got to closing, they actually paid like $10,000 to buy the interest rate down. Being that you're saying that the rates down the road are going to settle back down, paying discount points is probably not a really smart idea right now.
It's not, and I'm not knocking anyone that has a .com or an online presence. Those lenders serve a purpose, but we're a relationship lender. we are an advisor and we care about our clients. So I can't honestly tell my client to do anything that I wouldn't do personally or advise you or a family member. That's how we roll in our business. It means a lot to us to gain their trust. So telling somebody right now, when a client calls and said, what's the lowest rate you can get me? Or can you beat this low rate I have? That means you're overpaying for that rate. Again, there is the difference between a 4.875 and a 5.25 is probably $60 a month. We are seeing online lenders charging people literally a discount point or a rate buy down point is equal to 1% of the loan amount. So if you have a $300,000 loan and a lender was quoting you a rate that had 2 points, you'd be paying $6,000 for that rate, right? Well, do the math. $60 savings over $6 grand to buy that rate. And if we're saying this is a 2-year window to break even, that's a terrible investment. You're never going to get your return on those dollars. So we're advising our clients, instead of taking that money and putting it into an interest rate, put it into a conservative investment where over the next 2 to 3 years, you can make 5 or maybe a 10% return on that money. And when it comes to the refinance, which we know is going to happen, we just don't know when, you've actually taken your dollars and invested into gains, not a loss. And that goes back to that payment. As long as the payment is something you can afford and it fits your budget, the rate isn't the focus right now. So the real attention has been on interest rates for so long because it's been chasing the lowest rate. It's been a declining rate market. Now that rates are rising, don't chase the lowest rate. You're gonna pay too much for it. It's not a good investment. So I'm glad you brought that up. And we can take a look at anything. If you have something out there that you think is a good rate, but you're not sure, because a lot of times I'll say, hey, what do you think you're paying for this low rate? Oh, nothing, they're not charging me anything. On paper, on page 2, right there in front of them, $6,000, $7,000, $8,000, $9,000 for an interest rate. It makes me sick to my stomach. Let us take a look at it. We'll advise you if it's a good idea and make sure that it's something you want to lock into.
Yeah, that's fantastic. So if anybody out there has a mortgage right now that they're trying to shop around, give Steven a chance to look at it. He does that for free, just as a service to try to make sure you're getting the best absolute deal you can out there, especially with this market right now is so extremely volatile. All right, so once you've got your payment and everything in line with these people get pre-approved, because that's the very first step. Correct. That we always recommend. In fact, we rarely show a house to anybody that has not gone through this process of getting pre-approved, because we want to make sure we keep you in the price range you need to stay at. The worst thing that we want to do is show you a house at $500,000, you fall in love with it, and then Steven says, well, hold on, you can only purchase up to $425. So
not a good conversation.
No, not a good conversation. So we always want to get that pre-approval letter done right at the start, and then from there we can start going out and shopping. And Steven's got a couple tools here we're going to chat about. Why don't you talk about the Knorr program?
Yeah. So this is a very unique thing that we have. It's an artificial intelligence underwrite. So we take an insurance policy out against this computer system, and it pre-underwrites your file. So a lot of lenders will wait until you actually get a contract and then start to do the underwriting process. I've never understood that, and now we finally have a tool that eliminates that, because that's when the heartbreak comes in. Like you said earlier, we don't ever want to get mama to fall in love with the house and have to tell her it's not hers after she's already been decorating it. That's not good business for anybody, right? So we take that underwriting process. The second you apply, which is a secure link, it's free. It takes you about 10 minutes. There's no, it's just the step to do the application. It rolls right into a lot of automation. We try to automate your assets, automate your income, automate your tax returns. The computer system then spits out an approval that has a backing for us that at that point you are borrower approved, meaning we will not ask you for anything else other than your insurance policy once you get an address. The client is guaranteed for that loan. We then put a $3,000 guarantee on that as well. That's how confident we are that this approval is done. This is 72 hours after you apply, folks. This isn't, have you been looking for a house for 5-6 weeks? This is the first step. We want to make the loan the easy part. It's a tough housing market, just with the rates kind of being crazy, the housing market matches it right now. We need to take the lending part, take that off the plate, eliminate that stress, and use it as a competitive advantage where you can go to the seller, and I don't mind calling the selling agent and saying, these folks are guaranteed to close. If they don't, there's $3,000 on the line that ultimately ends up in the seller's pocket because we're going to use that as leverage. So it's a very good tool that we use for our conventional buyers, which most everybody's a conventional buyer right now. If you're a veteran or another like a USDA or rural home loan, it doesn't quite apply to you yet, but right now 99 out of 100 buyers are conventional. So it applies to almost everybody, and it's a very strong tool. Again, the application is a 10-minute process. It's secure. It doesn't cost you anything. It does not really ding your credit or anything like that. So there's no worries. If you have any interest in this, we can knock it out for you. And then that way, when I turn that pre-approval over to Brian and you go to find the house, which is the fun part, all the paperwork and all the headaches of getting a loan are off the table.
Yeah, absolutely. Yeah, and another thing that we're doing right now, especially for your first-time home buyers that might be watching this video right now or having a hard time in the market, maybe you've made an offer on 5, 6, 7 houses and you just keep getting beat out. We have teamed up with Steven, and through Steven's connections, through another program called Ribbon, we are actually able to come to the table now and offer cash offers for your situation. So basically how that would work out is we would still have you get pre-approved with Steven, go through that process, but their company called Ribbon would actually back up that offer even farther and say if for some reason Steven couldn't get your loan done, Ribbon would pay cash for that transaction for you to get you into that house, to make that offer a lot more competitive than just simply trying to submit an offer with just a simple FHA loan. And there's a lot more details about that program, but it is a fantastic tool. Would love to have a conversation if you would like to talk about that. Steven, anything else you want to add to that?
Yes, it's actually perceived as better than a cash offer because with a cash offer, and for you first-time home buyers and any buyers out there, the challenge is the cash buyers because cash is king. So when you go to make an offer on a house and it's a loan versus cash, if it's everything else is the same, even I would take the cash offer, right? So to compete with these cash offers, you now, even though you need a loan, Ribbon will put up the cash to back it, and then we can still get you through the lending process. And it's better than cash because a cash buyer can still walk away if they want to. This Ribbon program is guaranteed to close. If for some reason my loan were to go away or the client were to lose a job or something that would prevent the traditional financing from being in place, Ribbon is guaranteeing this thing to close. So for the seller, if you're a Ribbon cash offer versus a cash offer, now you're actually better than the cash offer because yours is guaranteed to close. It's a no frills, as is deal. It's done. So very good program. Again, what we want to offer our clients is we are focused on relationships. Relationships get closings to the table. So we want to leverage who we are locally with the tools we have to connect you, the client needing this house, and get you to the closing table. We want to put a roof over your head and we don't want you to rent. So all these things that we talk about that we do is the bottom goal is to give you an advantage as the client to win the deal. Focus on your payment and then let us help you win the deal and don't rent. Let's buy. It's still a great time to buy a home.
Yeah, absolutely is. So guys, thanks for tuning in today, and I appreciate Steven sharing some knowledge. Always a wealth of knowledge. Every time I sit down with Steven, I learn so much about everything going on from the mortgage side of the business. So guys, thanks again for watching. I'll catch you all next time.